Welcome to this tutorial on childcare expenses. In this short tutorial, we're going to go through an overview of how to calculate childcare expenses, and then we're going to jump into a question followed by the solution. Let's go on to the next slide. Now, childcare expenses are a deduction under 3C when one is calculating their net income for tax purposes. Generally speaking, childcare expenses can only be claimed by the lower income spouse. And when we talk about lower income, we're talking about net income for tax purposes. Now, there are some exceptions. If the lower income spouse, let's say, is in school, in hospital, in prison, or has an infirmity, then the higher income spouse is able to make a claim. Now, with the lower income spouse, their claim is the lesser of three amounts: the actual amount paid, the sum of what we call the annual child care expense amounts, and thirdly, 2/3 of earned income. Now, earned income is a defined definition, so review that definition in your textbook. Let's talk about annual child care expense amounts. The annual child care expense amounts is a set amount based on the age of the child. If the child is under 7 at the end of the year, that annual amount is $8,000. A child between 7 and 16, that amount is $5,000. And if the child is eligible for the disability tax credit, that amount is set at $11,000. Moving on to the next slide, let's talk about when the higher income spouse is able to make a claim. If the higher income spouse is able to make a claim, that claim is the lesser of four amounts, the three that we just talked about, and also a fourth limitation. This fourth limitation takes into account the number of weeks that the lower income spouse is not able to care for the kids times what's called a periodic child care expense amount. Now, this periodic child care expense amount is 1/40th of the annual amounts. Now, remember the annual amounts that we talked about in the previous slide, the 8,000, the 5,000, the 11,000? Well, the periodic amount is just 1/40th of those amounts. So if we look at the slide here, look at the under 7. If the child is under 7 at the end of the year, we take the annual amount of 8,000 times 1/40th, and that gives us 200. So that's what we refer to as the periodic child care expense amount. Now, the lower income spouse will still be able to make a claim, but their claim will be reduced by how much the higher income spouse is able to claim. So let's talk about the fact also that any unused amounts do not carry over to future years. So once the calculation is done as to how much the higher income spouse is able to claim and how much the lower income spouse is able to claim, if there's any unused amount left over, that amount is lost. It does not carry over to other years. Now, moving on to the next slide, let's talk about the steps to calculating the child care expense deductions in a two-parent family. Step number 1, calculate the net income for tax purposes for both parents. That's going to determine who is the lower income and higher income spouse. Now remember, generally speaking, only the lower income spouse is able to make a claim for child care expenses unless one of those exceptions are met. So that's step number 1. Step number 2, is the higher income spouse able to make a claim? And once again, yes, if the lower income spouse is, let's say, going to school, is infirm or incapable of taking care of the kids, maybe due to a mental or physical infirmity, or maybe in prison for a period of time. Then once we figure out step 2, if the higher income spouse is able to make a claim, then we calculate what that claim would be for the higher income spouse. And remember, it's the lesser of four amounts. We do that calculation, then we go to step number 4. We calculate the lower income spouse's claim. Now, the lower income spouse claim will be reduced by how much the higher income spouse is able to claim. And then the final step, any unused amounts do not carry over. So those are the 5 easy steps to calculating child care expenses for a two-parent family. Now, moving on to the next slide, we have our question. So it's a bit of a longer question. So what I would suggest you do is pause the video, read through the question, and then look at the required at the bottom of the screen. Determine the maximum amount that can be claimed by each of Thomas, and Lilly for childcare expenses, and we're told that they have two children. One is 4 years old and one is 13 years old. So pause the video here, read through the question, do your calculations for the maximum childcare expense deduction for both Thomas and Lilly, and then once you've done that, start the video to check your solution. Okay, let's move on to the next slide to look at the solution. Remember we said that there are a bunch of steps. Let's calculate what the net income for tax purposes is of both parents. Let's start with Lilly. Lily's net income, we start off with 3A, net employment income. That's her gross employment income minus the RPP deduction of $77,000. We add her net business income and interest income. And so in 3A, we get $95,000. Then we go to 3B, which is her taxable capital gains of $5,000. And so Lily's net income is $100,000. Then we go on to Thomas. Well, Thomas only has net business income, so his net income for tax purposes is $36,000. So we know that Thomas is the lower income spouse. That's step number one. Then we move to step number two. Is the higher income spouse able to make a claim? So is Lilly able to make a claim? Well, yes, because Thomas, the lower income spouse, was in full-time attendance at a post-secondary institution for 8 consecutive weeks. Now, the fact that Lilly was not able to care for her children for 6 weeks due to her hiking accident is not relevant because she's the higher income spouse. Moving on, so it is beneficial for the higher income spouse, Lilly, to make a claim because she's in a higher tax bracket. So we're going to have to figure out what her claim is first. But before we do that, let's calculate earned income for each of Lilly and Thomas, because we're going to need that when we get to the next steps. So on the next slide, let's calculate earned income. Now, earned income for child care expense purposes is a defined term. So make sure you go through this definition in your textbook. Essentially, it's gross employment income, including any taxable benefits. Add to that any net business income, and add to that any amounts received with respect to scholarship, training allowances, and research grants. So let's start with Lilly. Lily's earned income is her gross employment income, $80,000. Remember, it's not net employment income, it's her gross employment income. And we add any taxable benefits. Now in the question, she did not receive any taxable benefits. There was no stock options, for example. So it's the $80,000. And then we add her net business income of $15,000. So her earned income is $95,000. What about Thomas? Well, Thomas's earned income is his net business income of $36,000. So now we have the earned income calculations. Now, note that this earned income definition and calculation is different from earned income used for RRSP purposes. So just sort of keep that in mind. This earned income has a different calculation than earned income for RRSP purposes. Now let's move on to step 3 on the next slide. So Lily's claim, she's the higher income spouse, will be the lesser of 4 amounts. The first amount is the actual amount paid. Well, they paid $400 per week times 46 weeks. That's $18,400. The second amount is the sum of the annual child care expense amounts. The 4-year-old, $8,000. The 13-year-old, $5,000. So the total is $13,000 for the second limitation. The third limitation is 2/3 of Lily's earned income. And the calculation here gives us $63,333. Now remember, because Lilly is the higher income spouse, there's a fourth limitation, which is the periodic amount, which is 1/40th of the annual amounts, times the number of weeks that Thomas was unable to care for the kids. So let's look at the periodic amounts. 8,000 divided by 40, 5,000 divided by 40, that's the 200 plus the 125, times the 8 weeks that Thomas was in post-secondary education and he was unable to care for the kids. So that gives us 2,600. That's the lesser of the 4 amounts. So that's going to be Lily's claim. Lilly can claim 2,600 as a 3C child care expense deduction when she's calculating her net income for tax purposes. Then we move on to step number 4, Thomas's claim. Thomas's claim, because he's the lower income spouse, is the lesser of 3 amounts. Number 1, the actual amount paid, that stays the same. Number 2, the sum of the annual child care expense amount, that is also the same, $13,000. And then the third limitation is 2/3 of his earned income. His earned income is $36,000, so 2/3 is $24,000. Now, the lesser of the 3 is $13,000, and from that we have to subtract Lily's claim of $2,600. So Thomas is only able to claim $10,400 as a 3C deduction for child care expenses when he calculates his net income for tax purposes. And then we move on to the final step on the next slide. Are there any unused amounts? Well, the total child care expenses that they actually paid was $18,400. Lily's claim, $2,600. Thomas's claim, $10,400. There is still an unused amount of $5,400, which will simply be lost. The unused amount does not carry over to other years. Couple points to wrap up. Remember, the higher income spouse is only eligible to make a claim if the lower income spouse meets one of those pre-specified conditions, for example, in post-secondary education, infirm or incapable of caring for the kids for at least 2 weeks, etc. And it's also ideal if and when the higher income spouse is able to make a claim that they do, especially if they're in a higher income tax bracket, because then overall the couple will pay lower taxes. So that brings us to the end of this tutorial and question and answer for childcare expenses. Good luck with your studies, and we'll see you in the next tutorial.